If you look at bond yields, they've risen pretty sharply since the ECB meeting this month. How much of a problem is this for the euro area?
Well, good morning. It's good to join you again. I mean, I think the vaccination program has worked and economies are recovering. And that's very good news. And we should recognize that. What we're seeing out there is a bit of a conundrum because we're seeing labour markets slack, but we're also seeing supply blockages, perhaps not unexpected in view of the pent-up demand, certainly in services. So I think we need to see this play out. And I heard what you said just a few seconds ago about inflation. I mean, I completely agree that what we're seeing today is transitory. It's driven by transitory factors. But we do need to do two things. One, we absolutely need to be conscious of the significant shock that we've just experienced and that we're now coming out of. And we need to be aware of the risks that some of these supply shortages and blockages actually persist, and they may turn out to feature in inflation down the road. So we need to be humble that our models are not necessarily used to operating with the sort of pandemic that we've just been through.
So, Governor, are you saying that actually some of these supply chain issues, some of these higher prices will have an impact on inflation, or could they even have an impact on the economic outlook for the euro area?
No, I mean, I think I didn't say will, I said they could, and we need to be extremely vigilant and observe the data and what's happening. But we know, for example, just to pick one example, that the semiconductor issue, which is a blockage, a supply issue right now, especially for the car industry. Some indications that I have read talk about some manufacturers taking till the end of next year to come out of that. So that for me is a sort of signal that we need to be cautious about exactly what's happening and what may influence price pressures down the road. I'm not saying will, I'm saying could. But I think the economic outlook overall actually is positive. I think we have to recognize, as I said at the very start, the restrictions are being lifted and we're seeing economies recover. There are absolutely risks out there, and there's a degree of uncertainty we should all be aware of.
If supply shortages actually last longer, are they more likely to entrench faster inflation because of wage growth?
Potentially. I mean, that's the risk that we at the ECB need to be very conscious of and very aware of and ready to respond to if it happens. Of course, the pandemic could have also resulted in structural change that pushes in the opposite direction. So right now, I think it's the key word, I think, is vigilance that we need to maintain. And certainly that's what I'm doing.
Do you think, bond yields having risen will actually prompt the ECB to do something? So either leaning in with higher pandemic purchases or actually, looking at changing something at the margin?
Now, the ECB is absolutely committed to its price stability mandate. We completed our strategy review back in July. We set out very clearly what our plans are. Our main focus right now is to ensure that we understand what's happening to economies and to the euro area economy as it emerges from the pandemic, and that we're ready to respond as necessary. I mean, right now, as I said only recently in a speech, I don't think we should be looking to raise rates or respond to transitory inflation. I mean, I think that would be a mistake. On the other hand, we just need to be very conscious that there is a lot of uncertainty out there, and we need to be ready to respond to it.
We saw a more hawkish turn from the Bank of England and from the Fed. What does that mean for the ECB? Well,
it means that we are seeing economies opening up. around the world. And I think, this is good news, right? I think this is good news, and we have to keep remembering that this is good news. And certainly when we talk about inflation, bear in mind that in the euro area, we are looking to push up inflation to our aim of 2% over the medium term. So the messages from the Fed, the messages from the Bank of England, the messages from around the world is recovery is coming. And for us at the ECB, we just need to make sure that recovery comes in a way that achieves price stability.
Governor, if we see entrenched inflation, when would you actually see that?
Well, we're not seeing it right now. That's absolutely the case. I mean, as I said, we are right now, what we're seeing is transitory effects. We'll see that in due course if the data shows it to us. I mean, we'll need to see that, see what happens to wages, see what the response is by industries and sectors. So right now, I don't believe there is a risk of excessive inflation of the sort that I read about in the newspapers, partly because the ECB is absolutely committed to delivering on its mandate. And also, as I said, I think what we're currently seeing are these transitory pressures, but we just need to be very vigilant of the risks out there.
Given what you've just laid out, will PEP actually end on time at the end of March?
We're going to be, we're going to spend our December meeting coming to a view on that. I mean, at the moment, my own view is a program that was set up for an emergency at the start of the pandemic. As we see the emergency disappear, there are logical consequences to that particular program. On the other hand, there's a long discussion to be had at the ECB. There's a lot of uncertainty around with what's happening, as I said, in economies. And we're going to take all of these factors into account to ensure that ultimately favorable financing conditions continue. Right now, we've got them, but that's a judgment we're going to be making in December.
So a lot of economists, Governor, are expecting, the asset purchase program to be increased as PEP actually gets wound down. Would that be the right way of looking at things?
I think the right way of looking at things would be to wait till we make our judgment in December.
Fair. When you look at some of the longer-term impact of, climate change and some of the policies related to that, is that inflationary in the long term?
It could be. It could be. It depends ultimately, of course, on what the policies designed to achieve the transition to net zero, what they are, and how industry responds to them. But on the face of it, there will be, in my view, an inflationary impact of the transition. But the extent of it is something that's very uncertain, certainly to my eyes, right now.
And this, Governor, why? Because it's new technology that is more expensive, or simply, because it's difficult to transition?
No, I think it's a combination of things. I think the scale of the transition that's needed in the economies to achieve net zero is very, very significant. And I think probably more significant than many people realize. And right now, there's a lot of talk about what needs to happen. There are some ideas about what needs to happen, but actually we're not seeing a lot of that settle into a state where we can be more definitive about its impact on price pressures and how economies and industries will actually respond to it. I mean, I think we're at an early stage of it.